up in conversation, pretty much each of them, is defense. Well, it's sure had its days in the sun and heydays last year as well. From there, the stocks corrected, and now with the way the world is shaping up, you know that defense has to be part of your core portfolio. It's about timing it right, it's about valuation and where you see growth.
Yeah, absolutely. And again, same time last year, defense was a really hot theme somewhere last year.
Yeah.
And again, if you bought it then, you would have seen a fairly big drawdown. So the theme remains.
Yeah.
Defense companies continue with decent order books. Earnings visibility exists, but you have to make sure you're buying with some degree of margin of safety. So I would say, again, given the consolidation of the last year and correction actually in a lot of defense names, it's looking a lot better. Again, we'll have to pick and choose some names here, but I would say defense is looking sort of in line with the market is where I'd position it right now. I don't think it's going to be a massive outperformer because valuations are still high, even though they've corrected. But I think it's consolidated well and can perform a bit from here in line with the market pretty much.
To your point about consumption, what we're consuming hasn't changed, but how we're consuming has, right? Now it's those platform companies, which you now wonder as to how did you even function without them back in the day. Is the means to better consumption via platform plays and via the means as opposed to what you consume?
Sure. So a lot of these consumer tech plays, I mean, it's a sector of its own now. It's evolved into its own sector. Yeah. And this is really where big market cap can be created. We're seeing more listings coming up, Lenskart, for instance, or in Edtech, you have PhysicsWallah coming up, Pine Lab. So that segment is expanding. All of these companies are targeting close to 1,000 crores or more in terms of profits at some point in time in the next few years. So it's a fairly sizable profit pool in terms of the visibility today. And again, as we've seen from the US example, the dominant players do tend to grow and scale disproportionately. So you will have a few very large winners in each of these spaces that by default will have to become part of your portfolio at some point or the other. So that's another area that we didn't touch upon, but within the whole consumption space, this consumer tech segment will emerge as a sector of its own right. And there's a very large potential market cap that could get created there too. So yeah, we'd keep a close eye on all those names and definitely, again, have some of them in the portfolio.
What I also wanted to talk about was, it seems like next year is going to be better than what we've had. But what are the red flags, irrespective of all the domestic consumption story, the earnings revival, sort of valuation comfort, which is already at play? What do you think could go wrong?
No, so the big red flag we still see is more global. I would say domestically, normally the way we look at it, very top down, on the fiscal side is fine, the monetary side is good, earnings are not getting downgraded, valuations have somewhat corrected, flows remain okay, we're not even seeing positive FI flows yet, that could